What's the last movie you saw?
Huh?
What's the last movie you saw?
I saw two this weekend I was going to bring up.
Oh,
They,
wow.
I hated them both.
That's so good.
Hated
Oh, hold on,
ending.
wait. Our new segment. Brett's pissed. Go.
I saw a Liam Neeson movie called, I think it's called Retribution.
Okay, look, man, we all know Liam Neeson has some student loans, just like these nagging student loans that he has to pay off. So he's letting it fly, man. They say, Liam, here, pull up from half court. You're basically taken in a different universe. Go.
He's some kind of businessman, and he ends up driving his kids to private school who hate him. And as soon as he sits down in the car, there's a bomb underneath his seat that will go off when he gets out of his seat.
Wait, time out. He gets in the car, there's a bomb in the car, and it does or does not go off.
It will go off if he gets out of his seat.
Okay, so he's sitting put.
He's staying put.
Did the
And
kids get to school in time?
no, kids are skipping school that day.
Okay.
But the end of the movie was just horrible. How he gets out of this whole thing, and then
We live and we learn. We live and we learn.
I thought it'd be like a Speed. It had a good premise and Speed.
Speed? Are you kidding? Did you just Speed is so good.
That's why. So I thought it'd be like a Speed. A bomb on a bus. This is a bomb in a car. It's very similar. You can't stop the car. You can't stop the bus. But sheesh, no. Speed in the theaters was dynamite.
You saying Speed was better than Die Hard?
I gave it a 7. I don't know what I gave Speed, but I gave Die Hard lower.
Audience member, listener, get your things. We're leaving.
Did you see, was it called Law Abiding Citizen?
Yeah, of course, with Gerard Butler and
Yeah,
Jamie Foxx.
yeah. Did you like
Chef's
it?
kiss.
Chef's Kiss, you liked it?
Yeah, dude.
It was so horrible, the ending. It was ridiculously bad.
IMDb 7.4, my friend. So,
What?
yeah, in your face, buddy, in your face.
This is why I don't watch IMDb.
What? That doesn't make sense. You can't watch IMDb.
No, I mean, like, read it before the movie comes out.
IMDb is the best, dude. Trust the market, BH. Trust the market.
They are
Okay,
wrong.
let's
They
go.
don't
Let's
have
go. Let's go. Let's go. Let's go.
my classically trained movie watching skills.
All right, welcome to Talk Your Chart, episode 60. We are filming on September 3rd, 2024. Brett Horowitz, good to see you.
Happy Labor Day, non-Labor Day.
Yeah, happy 3-day weekend that just ended. It was my daughter's birthday. Shout out to my 3-year-old.
Nice.
Yes, you go first because I see your chart first.
So let's start with something that has made lots of headlines, and this chart only does a little bit of the justice around it. But there's all this information from Kamala. We're not getting into politics today about price gouging and whether the food and the grocery industry is price gouging, whether their prices are too high, the margins are too high, whether they're making too much money or not. The food industry is saying it's not us, that it has to do with the pandemic and supply chains and spike demand. And so the chart is basically showing here's the margins compared to where they were a few years ago, back pre-pandemic, and then you can go all the way back through the beginning of the 21st century. And so margins are up a little bit over that time. But again, this chart goes from 0 to 9%. So it's not like they're up 50% from where they were years ago. It is up a little bit more. But to me, the bigger issue is not just the margins, but it's the fact that people are taking this as, this is a brand of socialism, and then we can't have price gouging, and then we got to let the system just do what it does. And what I think about is that there are lots of things that already have some kind of a limited demand or limited supply and already have a price fixation to it, right? Thinking about rent. There are places where rent control is out there, where you can't raise your rent by more than X amount. We know that here in Florida, when you have a hurricane, we know that there are times when somebody can't gouge because there's a law against that for water and hurricane supplies, things like that. We also know that for Medicare, the government looks and gets involved in setting the price for certain things. So I don't think any of us agree that we should have this all over, but there are places where we don't want price gouging, where I think the public as a whole is happy that that is something that doesn't exist.
Okay, just to make it clear, when you say price gouging, you're referring to a corporation increasing its prices beyond a reasonable amount. That leads
Yeah,
to
to make
profits
more
beyond a
money.
reasonable amount.
Right.
Okay, got it. Okay. So, but we're also not suggesting that we want price caps. You're just saying that in some areas of the market, there are caps.
Yeah, in some cases it exists, and I don't think it makes it socialist. I think in some cases it needs to be that way because it's either something that everybody needs, or in some cases, I'm not sure why the law was put in place, but it's already exists. So you're not going to take that genie out of the bottle.
Yeah, yeah, I think you're stating a fact. I think the issue with price caps is they never work ever. They're always bad. They're always inflationary and they don't do a job. I think the better thing to do is probably let the network take care of the issue, not let a centralized component of the network take care of the issue. I think that's probably it. I think housing is a very specific piece, whereas food and beverage is kind of all encompassing. So I think the scope of both of them is probably not comparable, but I hear you, it exists in some capacity.
But
Um,
you made the case though that price gouging is, I mean, not price gouging, that price control is never good. What happens when you have a monopoly or a small duopoly or something like that?
yeah, I don't think that exists right now. Are you suggesting that exists?
In the ticket space or in other places, you're seeing all these mergers, and we know what mergers do. They always say it's good for the consumer, could give them more options. What it does, it takes away options and it raises the price usually.
Yeah, look, I think without a shadow of a doubt, if there are areas of the market where a monopoly or duopoly exists, that's hurting the consumer. And in this case, which has been the hardest part in the last 20 years, is the easiest thing to look at is prices going up. Then yeah, that should be addressed using the rule of law. But I haven't seen like any material evidence that corporate profits are ridiculous. However, I do know there's specific cases. It wasn't Costco. It was some other big box retailer that did get in trouble and did say that they were increases prices beyond a reasonable measure to make more money. That was a single kind of bad actor. I forget the name of the big box retailer. But again, I like if we go to the monopoly duopoly piece, then you have to talk about tech, right? And the monopoly duopoly that exists there. The problem with that is it's cheaper, not more expensive. So the network, i.e., the market, has done a good job for the consumer there. The question would still remain, is Google a monopoly? Because according to market and search, I think that's becoming less of an issue. Is Apple actually running a monopoly because of their gatekeeper status with the App Store? Perhaps, and that's getting a little bit of buzz. The problem there is Apple is more palatable to people than Google is. So I think that's where the issues are. If we just focus in on what Kamala was bringing up and the case of price caps, I think what she's trying to do is probably pull the more kind of left side of her party to make sure she votes for her with a policy that probably won't get passed anyway.
Oh yeah, for
Similar
sure.
to the Trump tariffs that are also inflationary and kind of silly in a certain sense. So yeah, I agree. I think this is a good chart because it shows you that it's not like profit margins have quintupled over a
Right.
certain period of time. And inflation is by definition always like a monetary phenomenon. It isn't a corporate greed thing, although that's a damn good headline, right? The whole corporate greed thing.
Yeah,
Um,
just my last comment would be that there are times where I think price controls need to be in place, right? There have been drugs where, some company decides to make them $5,000 every dose, which is outrageous.
yes.
But in most cases, we know that the public and supply demand economics does it better than what the government will do.
Yeah, I agree. And affordable housing is a good example of it too, and is necessary.
Okay,
What do you got?
moving on. Chart number two. There was a big headline a few weeks ago about how the number of jobs that were created in the last year got revised down. It was, let me read the number, the lowest amount since 2009, I believe. There was 800,000 jobs less that were created from April of 23 to March of 24 than was previously reported. And I know it got a big headline, but a couple of quotes I want to read that to me sort of embodies what this chart says. Number one was it's important to remember that these are not job losses, right? We didn't lose 800,000 jobs. It was just that the job count was never that high. So it wasn't like 800,000 people lost their jobs. It just was that they never had the jobs to begin with, and we counted them as having jobs. The second thing is that still to this date, 160 million people have a job. So whether that's 160 or now 159.2, because we know the unemployment rate is very, very low, a lot of people still have a job. The economy is still doing well. GDP was just over 3% for last quarter. The unemployment rate has increased because more people were looking for work versus being laid off. So I think you could take it. I see people on the left side saying how this is not a big deal. We still got a good jobs economy. On the right side, they're saying, oh my gosh, you inflated the numbers. This is horrible. We're going to recession. I think it's probably closer to the left if I had to give my opinion. What is yours?
Well, number one, this might be the best chart explanation that you've had all year. This is your 2024 high. I love it. Well done. Good chart. Good perspective. Here's the only thing that throws me off. Why is our data so bad? Like, that's a big revision, right? Regardless of if that many people got fired or not. But why is the data so bad in 2024?
I could go into the reasons why the number was changed, but it was way too much gobbledygook for me. It bored me when I read the explanation.
Yeah, I look at the employment situation all looks good, and it has unemployment's gone up because more people are trying to get jobs, which is good. The Fed rose rates to slow things down, and that's happening. So it shouldn't be a surprise to anybody that things are cooling off and getting worse, right, directionally. I just don't know why the data's so bad.
Well, but if we had gone back and said instead of 225,000 jobs, wherever the number was, it came in at 150, like over the last year. If we just had that initial number of 150, you'd be like, yeah, jobs are okay. They're fine, right? They're where they need to be. Maybe a little bit low, but still we're having them. Versus you get excited with the 200 number and then it gets dropped to 125 and all of a sudden it becomes, whoa, that's a big deal.
Yeah, I hear you. There's a shock and awe value to that revision down. And then it gets political and all that nonsense. I just think it's September 3rd, 2024. Can our data be better? Like, man, my kid knows how to use an iPad, but we can't do this. CPI is the same thing. If I hear one more time that there's actually a human going to a food store and saying the corn of the cob costs $7 over here. What? It's a person? That doesn't make any sense.
Well, you have a better idea?
Me, of course not. Then I'd go do it. But it doesn't make sense, dude. Zillow, like look at the amount of information Zillow has. You got payroll numbers from just ADP, that's it. There's some other company that could put together a better kind of piece of data than us relying on what seems like arcane resources, my man. Oh, I don't love it. I don't love
Oh,
it.
best we got right now. What you got?
Oh, this is perfect. Actually, one of these seven companies could probably come up with a better way of tracking employment. Brett, have you heard of the Magnificent Seven?
Yes.
Okay. And it's also a movie that we can find the IMDb rating, but that's for another time. So everyone's spending money on AI, and this is Torsten Slok, the Apollo economist, has been awesome in 2024. So I'm using another one of his charts that he threw at us. And this is just showing us capital expenditure of the Magnificent Seven. And as everyone knows, it's up, up, and away. And I was actually listening to a podcast this weekend, and I think it's been articulated a few ways like this, but I liked what this guy said. And I'm forgetting the dude's name, but he was one of the founders of PayPal, and it's not Peter Thiel. But he's basically saying that right now, this whole AI thing it's a platform play. And what can't happen to any of these large companies, and even ones that aren't shown here, is you can't miss the platform play, meaning that there's too much risk in underspending, that the risk of overspending it doesn't matter. And then all these companies will just hope that investors don't overly penalize them for doing what they believe is, I can't miss. And the miss would be underspending, not overspending.
Mm, I don't agree with that at all. I
Okay, why
remember
not?
the days when Sirius and XM were separate companies and they would spend on every personality they could get their hands on as much as possible. Joe Rogan, Howard Stern, NFL, NHL, baseball, this, that, comedy. And eventually it mattered when they started to spend so much money that their revenue did not keep up with the expenses. and the stock got punished. So I think this is companies are trying to jump into it because everybody else is doing, like you said, but the revenue is not there right now, and I'm concerned about how much these companies are spending.
Yeah, I think that's kind of the whole point. Without a doubt, revenue has to show up at some point, and not everybody's going to win. And I agree with you. If the revenue doesn't show up and scale at a certain point, they're going to get punished because the market will do that. That's the job of the market, right? If it happened, I'd say, hey, that's what earnings are for.
Yeah, that's
You
not a surprise.
overspent, you get readjusted. However, I think you can kind of have those two competing thoughts in your mind at the same time, similar to like the early tech companies in the early 2000s. While a lot of them were quote unquote wrong, pets.com is the obvious example everyone always likes to throw out. They were ultimately right that software was going to eat the world. And this whole platform thing of eventually it was from a desktop computer to shifting to mobile, right? So everybody had to go hard into mobile. Everyone thought Facebook was stupid when they were spending as much as they were on the research and development around the Facebook app. And obviously that they were right because there was a platform shift there. So I think there's something to be said that it probably makes sense. And again, I'm like an AI novice here. I use it on a regular basis. Probably replaced 30 to 40% of what I've done on Google search. I do now in ChatGPT. It does feel like there's a lot more foundational reason for this to be called a platform shift versus what we went through not too long ago, right? With like the DeFi 3, the whole blockchain and digital currencies and all that stuff that was happening that felt like the quote unquote platform shift. That's who knows when that's going to happen, if ever. This just feels different. I don't know if it feels different to you.
I don't know. I mean, this is just doesn't say it's IT spending, it's just capital spending, right? It could be other things beyond just IT. No?
Say it again.
Can't this be more than just IT in this chart? I mean, we got to move on, but this just capital spending could be more than just IT, be more than
Yeah,
AI.
this is focusing specifically on what they're throwing at as a marginal difference into AI stuff and all
Okay.
the NVIDIA stuff. This is NVIDIA. That's all it is. Um, Next piece. I know you love surveys, so I wanted to bring up surveys.
I do.
Okay, good. So this consumer sentiment survey, just why do I bring this one up? Because everyone's kind of, the market's getting a little bit ahead of itself. We are now up. Let's take a peek here. S&P is up 63% since the October 12th, 2022 low, and the S&P kind of outside of the US, so international markets up about 58% over that same time. Again, so October 12th, 22 to now, 62 in the US, 58 outside of the US. Just to give you an idea, and this is another chart that I had pulled up, the average bull market, at least looking at this JP Morgan source data, is 162% over your average bull, right? So it's not like we're getting long in the tooth from a gain perspective. And the other piece I wanted to show as far as exuberance, when you look at this consumer sentiment index from out of Michigan, again, to your point, it's not that I love surveys. I just happen to like this one a little bit. It's useless in the middle. It's always helpful in the extremes. If you go back to June 2022, when it hit kind of that low with over the last kind of 10 years, what happens after that sentiment low? You get markets performing well. What happens after a sentiment high? You get markets that perform not so well. And you can see that in the 9 sentiment peaks. What's the subsequent 12-month return? 3.5%. But the 9 sentiment troughs, what's the 12-month return after that? 24%. So all I'm doing here is kind of showing the irrational exuberance. While you may feel like it should be felt, it just isn't there at the moment. And I think that's helpful in realizing that bull markets don't die of old age and just because you feel like they've gone on too long. They will ultimately climb the wall of worry and deliver 162% on average.
Yeah, there was a story in the journal today about how the average investor is putting more money into equities. Their allocation in stocks has increased, possibly A, because it just happened because the market went up, and so your allocation is going to go up over time. Or it could be B, that's more active. People are making that decision to go in more into equities now. But when I see this chart and I hear that comment, I think, ooh, not a good sign. I'm not too excited when I hear that my fellow investor is all in, buying stocks when the market is where the market is.
Yeah, I hear you because the retail investors in the call top, the headline in the Wall Street Journal, I thought you were going to say this one is Americans are really, really bullish on stocks. I haven't read it. I haven't read it because that's just, again, that's an eye-grabbing headline. But this sentiment index, when you pair it with the AAII sentiment survey, again, that's like the allocation. It would feed into the Wall Street Journal one more because the allocation to stocks is above average.
I will short my average investor out there. When the investors say all in, I'm all out. Not all out, I'm out. And vice versa.
I'm in, dude. It continues. No recession 2024. Or will there be?